So in today's video, I want to take a look at the dollar. So if you'll remember, back here, I kept telling people that the dollar had a move down into an intermediate cycle low. It would, at some point, it would break the intermediate trend line. How many people, came on telling me how wrong I was on currencies. Well, clearly I was right on currencies. Um, The dollar is now moving down into that intermediate cycle low. It has broken this intermediate trend line. It's taken an awfully long time to complete this intermediate cycle low, over a year, but we're in the timing band. You can see last year the yearly cycle low occurred uh, right around very beginning of May. So even though this intermediate cycle has stretched out to absurd length, we're in that timing band for that yearly cycle low, and we've got this is the seventh daily cycle embedded within this larger intermediate cycle. So we're getting beyond late on this intermediate cycle. So I'm gonna say that we're gonna put in, when this daily cycle bottoms, and it's getting late. We're on day 35 today. These last several daily cycles have run between 35 and 38 days, I think. So the average is about 35 to 40. That has become the new normal in the currency markets, and you can see we're at day 35. We're entering that timing band for the bottom. So I think we're just about to complete the yearly cycle low in the dollar. That should complete the dead cat bounce in gold. And then now I don't expect the next intermediate cycle to be anywhere near this long, but you can see how long the advancing phase of this intermediate cycle was. I don't really expect another 54-week intermediate cycle once this bottoms, but we should get a rally that lasts at least a couple months. I would say it's probably going to retest these highs up here, somewhere above, let's say 102 to 103, 104. Don't know that we're going to break out and make higher highs. I kind of think we're probably stuck in a long extended trading range. So let me widen this out a little bit. So it looks to me like the currencies are just stuck in a range, and they may be stuck in this range for a long time. Who knows? But we're getting the move down into the yearly cycle low. It's occurring in basically the same time frame that it occurred back here in last year in 2016. We're late in the daily cycle. Let me put a Fibonacci extension on, or retracements on here, and you can see we're getting pretty close to the 50% retracement. So if we factor in that we're 35 days into the cycle and we're just about to hit this 50% retracement, that would be a prime spot for this intermediate cycle to bottom, and then we should rally for several months, at least a couple months, I would think, and that would probably be the trigger for gold to complete its dead cat bounce and then start the move down into the final intermediate and probably yearly cycle low over the next we probably got one more daily cycle in gold, so I'm going to say we probably get a bottom in gold maybe around the end of June, or even maybe into early July, and I think gold will at least test that lower triangle trend line. So here's a chart of gold. Here's what I think is probably a triangle basing pattern consolidation. A factor that is concerning for the gold bulls is that the dollar is making a lower intermediate low, and gold isn't even close to making a higher intermediate high. So, we've got some significant underperformance here. Some really weak performance in this bounce in gold. While the dollar is making a lower intermediate low, gold is a long ways from making a higher intermediate high. So this market is setting up fairly weak once the dollar completes that yearly cycle low and begins its next rally. There's a very good possibility that the next leg down, I think it's at least going to test this triangle trend line, and it may even retest the December low. So, once again, another warning. Yeah, this bounce, you're getting your chance to get out of losing positions if you didn't take my warning up here at the top when we got this top. If you didn't lock in your profits then, and you've gotten dragged down into this correction, do not mistake this for the beginning of a new bull move. If that was the case, then gold would be making a higher intermediate high as the dollar makes a lower low, and gold is not doing that. It hasn't even retested the declining 200-day moving average yet. So the metals market is setting up very weak here as the dollar makes its final plunge into a yearly cycle low, and then when the dollar begins that next rally, which could last for a couple months, gold is going to be set up to complete this intermediate cycle decline with at least one left translated and failed daily cycle that should at least, I'm going to say at least, test this lower triangle trend line, and there's even an outside chance that it could possibly test the December low if the dollar tests the December highs during that next rally.